Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is going to be the 5-8-13 EMA strategy. Today, we're going to do a little bit of a strategy workshop. We're going to go through a trade review. Number one, I'm going to go through one that I put out that was sort of gives us a good lesson on just a tough beat, and we didn't lose, but we didn't quite get in. Now, you might have got in depending on who your broker was. I will tell you that I didn't get in, and it was one of those where I almost threw my keyboard through the window. But we got to manage our emotions. But I'm telling you right now, everybody gets emotional. We're going to look at the gold market. We've got to do that. We're going to do a quick recap. I saw a headline out earlier today. It was almost as if they were watching our live stream from yesterday, our FOMC live. So I got to bring that one up because I feel like CNBC is listening. I think they're listening. But there's a lot going on here today, guys. So we got to get in there. I'm going to show you exactly how to trade this strategy. I'm going to show you the YouTube video. I'm going to go through it kind of slow because I don't want to lose anybody, but we are going to execute some trades similar to the crossover trade we did late yesterday on that 920 EMA crossover. The reason why we're doing these strategy sessions is because there's been a lot of demand for them. A lot of people are asking about them. Now, I'm more than happy to give my opinions on the markets as well. We're going to start off with just a few things that I see. And then if you have any other questions or any of the markets you want to look at, if you're out there in YouTube land or if you're in the trading room here, just go ahead and throw them in the live chat, and I'll do my best to cover those at the end of the stream. All right, everybody, here we go. Bobby Bob, good to see you. Kindly touch on WTI. It wouldn't be a trading day with me if we didn't do WTI. Dibble, good to see you. You guys, I'm sure you're winding down your trading week. You're getting ready for the weekend. You know my psychology on a Friday. If you made money this week, take half of it home with you. I spoke with a trader that we have becoming a very accomplished trader, and one of the things I said was, if you made money this week, you're pretty good. There was a lot of opportunity. There really was. There was a lot of opportunity, but there was also a lot of ways to lose money. There's a lot of ways to lose money as well. So I stayed on the sideline. For me, I'm a grinder. I like everything slow and steady. I don't like the big swings. They really bum me out. Even when you win, your dopamine gets way too high and you start thinking you can conquer the world. I like slow and steady. That's what I like. But, to each their own. There's people that made millions of dollars this week. They made millions of dollars. And if that was you, take 500,000 of it home. For me, just do me a favor. Take half of it home. All right, everybody, let's get to it. A lot to cover here today. The trade follow-up. I want to start with the trade follow-up because it's a great lesson on, being patient and understanding. Sometimes you miss a trade. And this trade was very close to entry. I look at my entry that I put down on that key level, and I probably should have shaded it and went to a 73. But I thought the 75 was enough of a shade, and we just didn't get it. So right here, the trade follow-up. This was from 2 days ago. We wanted to sell the Swissy. We wanted to sell resistance on the Swissy. I had an EMA up there that came into play on our month. This is a long-term level. This is a monthly chart. Now, remember, I'm multiple time frame, monthly, weekly, daily, intraday. We're going to do intraday scalping today, but I will tell you that when my monthly zones come into play, my eyes light up. It's like a poker player showing up to a table full of noobs, and they know they're going to win. I feel the same way. The problem is these levels just don't come into play very often. It's tough to make a living just trading monthly levels. But I had a 13-month EMA right here on the Swissy, 87.84, and then we had 62% on the Swissy, 87.91, and it really looked to me like we were going to hit a home run here. We were only looking for about 35 pips, but once again, if I have a high enough probability of success, then the bets get exponentially larger. That's just sort of the way that I structure things. My risk, my stop loss would have been tight, but the money would have been down. And they call that post time. If you guys are horse players, they call that post time. When it's post time and you feel like you got a good angle or you got a horse that's really going to pay you, sometimes you just got to shove. This would have been a shove trade for me, just because the Swissy is, when you get it out of whack a little bit, good chance it's going to rotate back down and pay you off. Matter of fact, it's a great chance. So right here, what did we have? There's our moving average. There's our 62%. This is just selling resistance. 75 was our number. 87.73. 87.73.4. Now, depending on your broker, you might have got snapped up here. I mean, you might have been able to make this trade. One of these, I just was really disappointed. Right up in here, we traded up here 3 different times. Right there. There's your 72. There's your 73. And there's your 71. So that's just a close but no cigar. I've still got it down, though. So if we rotate up from 87.39 or 40, I'll still be looking to sell it. But is it as good as it was? No. Well, you want that first rush at that. You want that first time up. First time's always the best time. That's when I wanted that, and we just didn't quite get it. So that was a trade update. But right now, Still in play. I don't like it as much. It wouldn't be a rent check bet for me now, but I do like that as topside resistance, and I think that we're going to see things sort of settle out a little bit and change next week and get back to normal. Now we had a couple requests to start off with gold. I've been watching gold. Gold is everybody watches gold, but gold's been interesting to me. I'm still very bullish here. I'm still very bullish gold, and the reason why is our uptrend's valid. I still believe that we go up here and really kiss 3,000, but right now, is it a good time to buy? Probably not. I wouldn't say that it's a great time. We saw the low down there. The low down there is about 26.43, and right now we're at 26.90. I would like to see us go off the board at about 2,700 for the week. I think that's fair. I think that's a fair valuation, but it doesn't look like we're going to get it. We're about $10 south of that now. And for me, if I was looking for an intraday scalp potentially, it's early enough in the day, I would go to my 30-minute chart and say, okay, what do I want to do? Well, I've got real ugly price action. And what I mean, it is compressed and we're moving flat. We're moving sideways. So if I was an order block trader or a smart money concept, a value trader, you could look at this and say, well, where should I buy if I really want to buy? Probably down in here somewhere, maybe this order block, maybe buy it off the daily low. Let's go to a 4-hour chart and see if that's any more help. We can sort of get a little bit of that Fed meeting involved here. And you can see exactly what you had here. You came off of the election aftermath, then we went up, we ran that right into the Fed meeting. And so now we just sort of are mucking around, milling around. So if I want to buy this for an intraday scalp, this probably isn't a bad trade using the 4-hour chart. That encompasses a lot of price action. There's a lot there. You can see right there we sort of had a hammer come back up above our 2684 level, which is 38%. And if you're going to come down and touch that again, I think you probably could get away with buying this 38% again, if in fact you wanted to do that. So probably 85s, 2685s, something like that. Now remember, on that Fed meeting yesterday, we got chopped up, and I sort of told you, I said, hey, listen, if this stuff isn't there, you've got to take the loss. So if I was going to make a play here, I would be looking at this spike low. This spike low is at 2680. 84. Do I really want to make a $5 trade betting we go back to 90? You could, you certainly could. We'll go ahead and put the order down and see if it comes across the board for us while we're online here. But we'll go ahead with a buy limit, and we'll just dial this in, and we'll see if we get elected. And I want to go right from, let's see, I want to go right from 2685. All right, we'll go from 2685 and a quarter. And we'll go ahead and put that in the queue and see what happens. Remember, we got our lunch eating kind of yesterday. Made a little bit of money on that Euro USD crossover. If you were a scalper there, you could have got about 400. We lost 400 on the other trade. And remember, these are demo dollars. These aren't real dollars. All right, guys, we had one more request. Bobby Bob always asks me about WTI. And let's go ahead and cover this right now. And then we'll get into our EMA tutorial, which some of you may want to stick around for. Others may just say, I'm not an EMA trader. When we look at U.S. oil, I've really been an outspoken, I wouldn't say I've been an outspoken critic of the market. I don't believe that what we've seen over the last several weeks or even months or even this summer have been remotely indicative of the truth. What I mean is we're not seeing true price action. And the reason why we're not is all of a sudden we've got shifts in Fed policy. We're going to cover that in a second. You also have the U.S. election was huge. That was a major market driver. Pretty much everybody knows how I feel. If Harris would have won, I was bullish crude. Now that Trump won, I'm bearish crude. And as long as there's a civil and peaceful transfer of power, you're going to see bearish crude oil. And it's not going to take long to happen, but it hasn't happened yet. So remember, my big level down here was, 64.70. I'm not going to cover that again. I'm all over the internet saying that. But for right now, this is hard. And I don't like things that are hard. I really don't like things that are hard. Now, the first thing we could do is we could say, okay, Shane, you could go spike there, and start looking for resistance to sell. And I'd say, yeah, you could, but where do you sell right now? 50%, I don't really trade that. 38% got taken out. You see what I mean? This is really ugly. So, if we would have got a nice big run up there at about 74, yeah, I could have bought that for $1. We could, scratch that, not buy it. I could have sold that for $1. Excuse me. I got caught up in the old cliche. But what we could do here is we could definitely sell up at 74s, but we don't have that. We're down around 70. I think that the market's probably going to go off the board at about 70. I think that's sort of fair value. So if we look at maybe let's go down to our 30-minute. It's very early in the day. We're starting to see the throttle open up to the downside. So if I was trading right now, okay, I know that I'm about an hour into premium crude oil trading time. You can see our volumes are pretty right there. So the onslaught of the volume, there's your next 30 minutes. That's more volume. Right now, we're about 10 minutes? You're going to have even more volume. On the 30-minute, this is my bread and butter. Right now, we're pushing intraday lows. Or we're pushing session lows. I want to sell. If you want to be a trend trader and you want to be aggressive and you want to be a day trader, I dial this right down to a 5-minute chart and I say, okay, what do I want to do here? I want to join the trend. Can I really do that using Fibonacci's? Not on this time frame. Why? Right there's the high there is 78. The high there is 78. So you'd have to go sort of from this spike high back at about 9:45 a.m. Eastern to the current low. Now, one of the things about trading in this fashion is you got a fairly good high probability of scoring. You really do. Look for 5 to 8 ticks off of that 38%. That's high impact scalping. You could do it. The problem is you got to be real patient, and you may be chasing this thing for a couple of hours until it pulls back. So if you wanted to be hyper aggressive and you really liked the downside of this market, which I do, okay, we could do something like this. Now, this is high risk stuff. This is sort of where you're going to have to be patient for your entry, but you're going to have to cut the trade off fast if it goes against you. So right there, 70.48. I love the level. It's right around 70.50. I expect us to catch sellers there. I really do. Could we, in fact, make a bit of money there? Yeah, we probably could. But your spreads have to be tight if you're trading a CFD like this. I would be looking to do this on a futures contract, WTI futures right here, 1-minute chart, December contract, spike right there, spike high, spike low. And then this is how I would execute. I would go there, trade, and I want to go ahead. I want to sell limit order right around, 50? So 51's our level here in the futures market. I would go ahead and sell 50. My take profit is going to be, what's going on here? Well, we're not going to get that far. It doesn't look like it's coming our way, though. So one contract, take profit. You probably just want 5 ticks, something like that. Stop loss. No, you don't want 25. You want to be right around there, maybe 5 ticks as well. I don't like playing that tight, but you can certainly do it. And that would essentially be your scalp. So, it doesn't look like we're going to get it right there. Your high's at 48. It would have been a good trade, and see now the market's really selling off, and what's going to happen is we're not going to have that market structure. So you're probably going to have to stick with a 5-minute chart. That was a pretty darn good trade. But remember, guys, if you're scalping, it's a game of inches. It's a game of inches. All right, let's get on with the show here. But WTI right now, I would stay away from it. It's non-directional. I don't think you want to take a position. If I had gun to my head, what do I have to do? I go short, which can be dangerous over the weekend. So hope that helps with WTI. It'd be a no-fly zone for me, though. If you want to trend trade it today, like I showed you intraday, you could do that. But taking a position here's trouble. It's trouble. We'll buy down there around 65. All right, we just got our bells went off. We just got our play on the gold trade. Let's see what happens here. It's falling away pretty aggressively. All right, we'll let that simmer. All right, if you guys want to trade any of this stuff, Switch Markets has you covered. Be sure to check them out. Got incredible bonuses there. It's really not too bad of a destination for you if you're in a qualifying locale. All right, week 45. It's been an epic week. Remember, some weeks the economic calendar just doesn't matter. It just doesn't matter. And this week, it just didn't matter. We're pricing elections. We're pricing FOMC. That's it. The rest of it, all the numbers that came out, you'll notice we didn't cover any numbers this week because they don't matter. They absolutely don't matter. The election was the number 1 market driver. The Fed meeting was the number 2 market driver. And we saw sort of a collision of monetary policy and politics. So what is this? Traders see a good chance the Fed cuts again in December and then skips in January. They watched the stream yesterday. They had to. Somebody over at CNBC had to. We saw as soon as Jay Powell started to hem-haw around about, well, we don't know. Well, you had your dot plot in September. Well, we don't know what's going on. Well, we got to see what the tax cuts do or the legislation. We can't adjust our policy till we see the legislation. He basically said that if they cut taxes and they raise tariffs, I don't think we're going to cut interest rates. Crazy meeting, guys. That was crazy. I watched it again and I went, man, he is really aggressive and really standoffish, and I can already see the conflict coming. I mean, those two, Trump and Powell, are going to be butting heads as soon as he's inaugurated, and that's just the way that it is. What does that do to policy? Not supposed to do anything? Will it do something? Yeah, probably. All right, guys, we're going to look at this trading strategy right here. It's the triple moving average crossover. Now, if you haven't checked out our YouTube channel, it's over there on How to Trade YouTube. A lot of folks have been popping by lately, and we sure appreciate you watching the video. If you haven't seen it or haven't watched the video, go check it out if you're interested in moving average trading. Now, we're going to sort of give you a tutorial here, sort of the quick rundown, and I'm going to show you how to trade this thing. But I recommend just watching the video and watching some examples. I go through it slower and take my time there. So triple moving average crossover. This is very simple. We're going to put 3 moving averages on the chart. All right, and there's a variation of which ones you can use. Today we're going to use a real scalping approach, a sharp time frame approach. Simple is best. This is easy. We're not going to use anything for confirmation. This is as easy as we can really make crossover trading. The hardest part's getting the sort of the colors of the three moving averages on your chart. Here we go. When price is above all the moving averages, it signals an uptrend and bullish momentum. When price is below all the moving averages, it indicates a downtrend and bearish momentum. So what I would say is this. Remember, this is our number one qualifier with our triple moving averages. Price has to be above all the EMAs for us to buy it, and it has to be below all the EMAs for us to sell it. Now we're going to talk about our entry criteria here in just a second. This right here is an example of a bullish buy. Now, our bullish buy, we're using a 921.55 here, EMA crossover. You can use a lot of different crossovers. We're going to talk about that in a second. But essentially, what we're looking for is the middle periodicity. So if you're using a 921.55, we're looking at the middle periodicity. The middle periodicity crossing the short. So if you've got, say, the 9 right there. So the 9 crosses the 21. The short crosses the middle. See, it can be confusing. The short crosses the middle. That's when you're in. Why? Because the short's our hot one. That's our signal. That's our signal EMA. So one more time. When the 9 crosses the 21 in this instance, the short term crosses the middle periodicity, you buy it. Now, the caveat is price needs to be above all 3 EMAs. So think of your longest term EMA that you're going to use. Think of your longest term EMA as being your anchor EMA. That's the one that's going to tell you which way the broader trend is going. That's important. So that tells us, okay, the macro trend is going with our long EMA. Our middle EMA is sort of showing trend strength with regards to our short EMA. Short crosses the middle, you're in. It's that simple. All right, so let's go ahead and take a look at this here. Bearish to the 921.55, and it's just the opposite, right? There's your crossover. Your 9 goes up, crosses over the 21, and down we go. The 55 is safely showing us the market direction, and you're getting in on the trend. So this is a trend trading type of approach. Now, the real question is what do I use? Which durations do I use, and which time frames do I use? This is the art of moving average trading, okay? Now, I don't know if you guys remember, there's an old Kenny Rogers song called The Gambler. Every hand's a winner and every hand's a loser. Where you're going to succeed is understanding which durations to use for your moving averages, which markets to put it on and when. Now, a lot of people just rolled their eyes and they said, Shane, well, if I knew the future, I would just buy lottery tickets. Well, think about it. With a moving average, you want to put it on an active market. You want to stay out of low volume flat markets. If you try to put any type of moving average crossover or otherwise on a flat market, you will lose. There's no question about it. You will get absolutely chopped to death and it will not work. That's the first thing. The second thing is, remember, the shorter the periodicities on those moving averages, all right, the shorter the periodicities, the more likely you are to get chopped up as well. That's why many stock traders, they just sit around and they say, well, what should we do? And they use like a 50 and a 200. When the 50 crosses the 200, I buy. Crosses over it, I buy. When the 50 crosses under it, I sell. It's that simple. So simple is always better. Today we're going to do something that's highly risky, highly volatile, but there's a lot of demand for it. Folks love to see this stuff. The 5/8/13 is what we're going to use. We're going to put it on short time frames, and we're going to make some trades. So the first thing you have to do is you have to identify a market that you want to use, okay? A market you're comfortable with and a market that's active. And I think we have one right here. So let's go right out. This is the dollar yen. The dollar yen over the past several weeks has been one of the most active majors. And it usually is. You see bigger daily ranges. You see a lot more volatility in the market. If you're going to trade moving average crossovers, you're going to need volatility. Now, you'll notice right here, our red moving average is going to be our 5. Our EMA, our 8 is going to be our blue, and our purple is going to be our 13. So in this case, our 5 is going to be our trigger, Then when it crosses over, we're looking to buy, and then when it crosses under, we're looking to sell, all right? And then our long term is going to be the 13. That's going to be our anchor. So it's as simple as that. There's our 13, there's our 8, and here's our 5. Now, we're looking to either buy or sell when the red crosses the blue. Now, the caveat is if I want to buy the market, price has to be above all 3 moving averages. If I want to sell the market, price has to be beneath all 3 moving averages. So the first thing we look at is, okay, right now we don't have a trade in this. It's going to take us the rest of the stream, maybe even to set one up, or maybe even longer. Right there was a sell, okay? There's your crossover, but you'll notice your long-term EMA is in trouble here. It's sort of fouled up. It's weaving around. It's crossing over everything. But once it gets established out here, right there, we're going to cross over that middle one, and you're going to be selling right down there. That's your sell. So this trade, I hate to do things in retrospect, but when we stream, markets don't always move, and it's really what, sometimes these trades go, sometimes they don't. Now, that right there would have been your sell. Why would it have been your sell? Let's see if I can maybe move these to the front. These are always, In any case, you're just going to have to trust right there's where it crosses. Crosses there, prices beneath all 3 time frames. Bang, our anchor, our center, there's our trigger. Trigger came over, sold right there on the close of that bar. Why did we sell then? Because as soon as that thing closes, that crossover is official, I'm short. I'm short immediately. Now what happens to us? We immediately take a draw. But if we stuck in there, we made some money. Now the next thing I would say is, okay, how would you have built that trade? For me, it would have been relatively simple. I'm going to show you a couple different ways to do it. Managing these things is also going to be the most important thing you do. Why? Because every hand's a winner and every hand's a loser. Every strategy's a winner, every strategy's a loser. It's all about risk reward. It's, we can get entries all day long. It's how much money you're taking on your winners and your losers. Now, this really isn't my style of trading. You guys know me that have been around for a while. I'm a scalper. I like to get in. I like to get out. I don't like to hang around. I've been watching the gold trade. We had a chance to profit a little bit, and I'm going to let this thing run and play out. I would have probably already taken the money. That's just me. Right here, if you're going to make these trades, you're looking to get in on moves. You're looking to get on intraday trends. Now, I know we said scalping, and scalping is what we're doing here. We're on a 5-minute chart, so our trend theoretically is going to be much smaller, than a 4-hour or a daily, something like that. But in this case, you would have been short from right there on the close. Your stop loss, I always believe in putting it above the previous swing high or below the previous swing low. If you do that, you're going to give these things a chance to work. Now, if you didn't do that, a lot of people are hyper aggressive with this stuff. They put their stop loss right above, say, your 13, your long duration moving average, and they just stop themselves out right there, cut it off, no harm, no foul, we're out. Well, I like to let things work because the market, she can be a cruel mistress. And a lot of times head fakes like this make winning trades losing trades. This is a winning trade. It won. So there's your sell. Stop loss is up there. What do you got? You sold 60s. Yeah, you're up there. You're at 78. Where are we at down here now? 46. So you're up, 14, something like that. So you could stick around looking to finish this trade on a 1-to-1. Now, the other thing about this strategy that you can do that a lot of traders do, and they make a lot of money doing it, I'm not going to dispute it. They take positions on them. They take short time frames, try to get in on the pressure when the market's active and get in on a runner. So you can do these things. Now, do we move it to break even? What do I do now? Okay, Shane, it's in the green. What do I do now? I go that, and I'm not backing away from the question. I know what I do. You can do a number of things. You can leave this thing with a fixed risk versus reward and just say, nope, I'm going for 1-to-2, 1-to-3. I want my winners to be big, my losers to be smaller than my winners, and I'm just going to let it play out. I'm going to let it go. That's one way to do it. The other way to do it is to get up a certain amount of pips and move to break even. Make it a risk-free trade. A lot of traders do that. It makes them feel good. That's great. Yet another way is to move your stop, to bring it down, have a trailing stop on these things. The market goes 8 pips in my favor, then my stop starts moving. Could do that as well. You could use it symmetry-wise. You can just go to the top of the previous price bar with the idea being, I'm going to get stopped out a lot, but when I get in on those nice symmetric runners, those bangers, those big-time trends, then you have an opportunity really to win. So for me, for the sake of this experiment, not experiment really, but for the sake of this this sort of tutorial, we're just going to leave it at a static risk versus reward. We're down there at 152.20. We sold 152.60s. And again, this is retrospect. We didn't get to do it live, but something like this is going to be, you know, what is it, 18? We got 18, so we're looking for 36 on a 1 to 2. So a 36 is right around 24, I believe. I was told there would be no math. So that would be my target, somewhere down in there. That's a 1 to 2 trade. Mark Corp, hi Shane. Sorry I'm late and I was working out. Hey, guys, get to the gym. We're on demand 24/7, 365. Get to the gym. Be healthy. Do the best you can with the diet and the exercise and, you know, the alcohol and the tobacco and all of it. Do your best with it. So if you're working out, hey, if this is your gym time, you got to hit the gym. You catch these on demand. There's no worries there. The only one that can't be late to these is me. That's for sure. Every time I'm late, I get pretty frustrated with it. All right, and I was No Donation Friday. It is no donation. If you made a lot of money this week, put the money in your pocket, half of it. There you go. Have a great weekend, everybody. All right, here we go. That was one trade. See, I don't really care for this. If I'm trading this, I probably would have been doing something like this with the Fibonacci's going, well, I guess we're still trending. We're beneath 38, so, you know, theoretically it still looks good. We'll wait and see. Does it fall away and hit our target? Maybe it does. All right, U.S. equities. Here's an NQ. Now, this is fascinating stuff. This is a 5-minute chart as well. It's been an absolutely miserable open if you're trading the NASDAQ. I was looking right there, opening bell, ding, ding. Now, why would we target the NASDAQ on a short time frame? Because it's hyperactive right now. All the volume is coming back into the markets. It's right after the U.S. Open, and we really are taking this strategy and trying to get the market to break. We're looking to get on the right side of it. Now, can we do it with a 5-minute chart? If you get in on a trend day, let's say you would have got a trend day, maybe we go trend day up or down, and this strategy gets us into it, you're going to make a lot of money. Now, the problem is when we get into those flat days where we do this, then you're going to get stopped out a lot. So right now, if we're looking at a 5-minute chart, I'm saying, okay, what do we got? We have an absolute mess. Right there, we could have said, okay, the 5, I got 9 on the mind. The 5 EMA just crossed our trigger. Okay, that's our trigger to sell. But look what happened. It's not your trigger to sell. Look where our anchor EMA is, our 13 EMA is. That disqualifies that trade. All right, remember, our anchor, if we're going to sell, our anchor has to be above price action. Price would have had to be below all 3 of these. So in that regard, we sort of got saved. Look at what's happening here. That's the idea behind having these qualifiers, guys. Look where our long-term EMA is. It's disqualifying these sells. It's flat. It's keeping you out of trouble. Remember that. Price has to be below all 3 EMAs on a sell and above all 3 EMAs on a buy. I can't stress that enough. If you're just sitting there waiting for the red one to cross the blue one, sell, buy, sell, buy, sell. That's not what we want to do. We want to get on the right side of directional moves. Right now, that's dangerous. I would take that chart, give it to somebody else. I'd say, you know what? I'm not smart enough to trade it. You guys trade it. Let me see. MEW, how you doing out there in YouTube land? Can I use these EMAs on a 1-minute chart? Yeah, you can. We're going to do that in a minute. It's risky. 4-hour chart. We ran into the same sort of problem here. Euro USD 4-hour, my bread and butter for the Forex. Really like the 4-hour chart on the Forex. So right there would have been your trigger. Could you have taken this buy? No. Why? Look at your anchor EMA. Can't do it. All right, we're looking to sell. Okay, price is beneath all 3 of them right now, isn't it? Could have sold right there. There's your crossover. Is price beneath it? Yeah, it's pretty close. I would say on that close right there, your price is beneath our anchor. It's beneath the center, and it's right at or beneath, just a little bit beneath your center point there, your trigger bar, your 5. It's beneath the 13, the 8, and it's probably right on the 5. It's very close. Could you have taken that trade? Yeah, you could have. You could have sold that. That's not a bad one. Now, where would my stop loss have been? For me? So I would have been looking to sell right here. My sell would have been on the close of that, which would have been what, 107.80, 107.78. Stop loss is up there at 108.25. So what do I have to get out of this? 22 plus 25 is what, 47? So 47, and let's say my entry point right here is 107.78. So on a 1-to-1, I got to draw, what, 30, 31? 31's got to be my profit target. Somewhere in there. What if I want to use market structure to really design where I'm going to go, what my profit target needs to be? I could shoot right here for this bearish market structure. We could shoot for this demand zone right down in here. We could shoot for 107, a big round number. How about 107.09? Do I like that? I like that. It's right above 107. Gives me a chance to succeed. Why not? So right there, what do I have then? So if I'd have sold, my entry point was right in there, 107.78. You're putting this on for what, 70 pips? And what are you risking? 43. It's not a bad trade. It's not too bad. Let's see if we can get one of these live. All right. To answer your question, MEW, if I want to do this on a 1-minute chart, I'm not going to do it on the Forex. Forex is a giant market. This is a $5 trillion market a day. And another thing you're going to have to contend with the spreads. So you're going to, if you were going to do it on a 1 minute, God, it would have to be something like a Euro USD where there's no spread. That's the first thing I would say. Second thing I would say is you've got to find something that's moving and not moving sideways. And so I'm immediately, this time of day for me in the U.S., we're an hour into the U.S. session. I'm looking for something that's moving. All right. So I'm looking, okay, what do I want? I'm going to go to a futures contract here. A lot of you don't trade futures, but it'll show, sort of give you an idea of what we can do with futures. So what do we want? Do I want the NASDAQ? Not really. The Dow's up 0.5%. That's the one that's really moving. What else is moving? WTI crude oil's moving, down about 2.75%. Gold futures, not really, only about 0.25%, getting hit a little bit to the downside. Let's go ahead and try the E-mini Dow. So if we go to the E-mini Dow futures, something like this. That's a 4-hour chart. Clearly, you would hit a home run, but why did this move even develop? The election. That's why. Let's go to a 1-minute chart and see what we got. Okay, so what has to happen right now if we're trading a 1-minute chart on the E-mini Dow for us to get a trade? Price has to break here. Our long-term EMA, our 13's got to go higher. And then we've got to get our 9 and our 20 to cross. The 9's going to cross the 20 right now. You can't sell it. Why can't I sell it? Because we've got an anchor there. That's why we have 3 moving averages. They keep us out of trouble. Let's go right down here. Let's try WTI crude futures and see if we can get a trade here. We never did get our pullback sell from 50. That's a shame. That was a good trade. Okay, 1-minute chart. Okay, our anchor EMA. Okay, our anchor's on top, so we're really, we have a chance here to sell. We've got sort of a, our trigger just crossed. This is going to be a challenge here. We're looking for this really to drop. Price, okay, right here, we could get the trade in about 30 seconds. If we get a bearish finish to this candle, we'll go ahead and shoot it and see what happens. Okay, it looks like we're going to get this. Now, price is going to be beneath all 3 EMAs. They're sort of flat, but that's okay. We're looking to get in on a move. That's why we're using 3 lagging indicators to try to get in on a future move in price. Okay, so right here, we got a bearish move coming. I want to sell. We're going to be selling this thing at market. We're going to go ahead and we're going to rock a 4 lot here. And then I'm going to show you where my stop loss and profit target are going to be after we're in the trade. Okay, right here we go. 4, 3, 2, 1. Okay, sell it. There's our crossover. Okay, 5 cross the 8. 5 cross the 8. And there's our 13. We're in. We're in. Now, how does this thing go? What do I want to do with it? This is 1-minute chart, okay? It doesn't get really much more aggressive than this. Stop loss is going to be right up here. What's my swing high? Swing high is at 70.39, okay? I'm going to put it up at 40. That's about, what 18 ticks, okay? It's a legitimate risk here. I mean, it's a legitimate risk. What am I looking for here as a profit target? Well, I've got to get at least 18 on it. It's a big risk for a 1-minute chart. I probably wouldn't be doing this with this small of a time frame, but it gives you a good look at exactly the mechanics of this trade. So then what are you looking for? You're looking for 04. Something like that. That would be a 1-to-1. Is it a great 1-to-1? I don't particularly care for it. but the market is trending south. We're off almost 3%. WTI crude. The sellers are owning the day. The real question is do we get chopped out of this thing? Do we reach $70 before we reach 70.40? Now, the other thing you could do is, if you were serious about this stuff, is to take this down and just say, you know what? Let's play for some money. 22. Let's put this at a 1 to 2. I've got 18. I want to get 36 pips. I want to be right down in here somewhere. So that would be 22. I need another 14. So 36 is what? Somewhere right around 86. That would be my trade. Now, do I have any business making that trade on a 1-minute chart? Not really. I can go through back testing, and I guarantee you I can manipulate risk versus rewards, and I can build a strategy that looks amazing on paper for this. I can. That's called backfitting. That's the dangers of backfitting data. I watched my partner do something, my first partner. I watched him do something very similar with the system we were using. Went through it. He said, okay, we've got our indicators. They get us in the market, and now all I have to do is optimize it. Well, what should I do? Okay, what do you think? What do you guys really think the results of our studies were? It was to use a tight a tight stop loss in a great big huge profit target. That's what showed to be the most profitable over our back testing period, which was 5 years. And I went, well, how many losses in a row did we have? 30. What was the maximum drawdown? 250,000. It's at that point you realize that it's not feasible to trade that way. It won't work. So as much as I love the triple moving average strategy, and I think it's a great place to begin, I really do. I like the way our anchor, we've already had 3 examples of where that anchor EMA kept us out of trouble. Love it. That's fantastic. And will this get you in on moves? Yes, it'll get you in on moves. Absolutely. Is it more of a day trading approach than a scalping approach? I would say yes. Is this trade going to work for us at a 1 to 2? I would bet against it. We're at 25 right now, and we're in a quarter. I think we rotate up towards 50 before we head back down. But we are on the right side of the market. We're running with the trend. We just have a real short time frame signal getting us into it. Right now, we're getting hit. I mean, we don't have to be a mathematician to figure out that we're probably going to get stopped on this trade. So when you're building your risk versus rewards on these things, be careful. If you want to scalp, you may be able to find an angle to, hey, you sell right when that 5 crosses the 8, and then you grab 8 ticks and you're out. That may be the way to do this. But what you've got to do is you've got to figure out how much money you have, how your temperament, your sense of right now. This is killing me. This is not what it's killing me. I'm watching this going, God dang it, we should have just taken this thing off. But if you're going to trade a system and a strategy, you have to have the discipline to let them run to your winners, and you have to have the discipline to cut them off when they lose. That's all there is to it. So something to think about there, but that's a live triple moving average trade. Looks like it's going to lose to me. I'd rather get back to something that worked pretty good for us. I don't know, guys. It's all about how you want to trade, and never forget that your creativity is going to be your number one asset as a trader. That gold Fibonacci was pretty good. It was pretty good. Little $500 demo dollars. Let's take it. Now let's go back to our triple EMA. We're fighting. Hey, we're fighting. I like our stop loss location. If you wanted to take more of a position, you could put this thing up above 44 if you wanted. Market structure, for me, I ain't too worried about it. But, I sort of put the strategy down a little bit. But look at what you could have had if you hit this thing back about, an hour ago. There's your 9 crossover. And there would have been your sell. Your sell right there is at 70.95. It's pretty good living. That's an 85 tick move. Just looks to me like we're a day late and $1 short. But that's an illustration. You also could have stopped yourself out right here. You said, well, the 9 crossed it over. I'm out. Market structure's changed. I'm gone. Could have done that as well. Just whatever you do. We're going to get stopped right here. Whatever you do, be consistent. So right there, I'm going to have my stop loss right up here at 40, which is going to be what? It's not going to be a limit. It needs to be a stop limit order. There's your stop. So we just got stopped. Textbook. Bang. Made a little bit of money. Market reverses. Usually your first stop loss is your best. Something like this, though, Could have got there. Now, if I'm looking at this thing, I go, all right, 5 minutes. What do we got on a 5-minute chart? High there, 82, 82. No, can't do that. Let's go to a 30-minute chart. $65. Might actually coalesce with that 5 EMA. All right, everybody, that's the 5-8-13 scalping strategy. We had a loser there. Did some pretty good Fibonacci work on the gold market, though. So let's go with that. Let me see. I trade, let's see, MEW. Sorry, I got behind the message. I trade the XAU USD only in the U.S. session. That's probably a good idea. Sometimes London. Yeah, I think you could trade it 24 hours if you use the bigger time frames. Manish, good to see you, Manish. Thank you. Big fan of your work. Thank you for the wonderful strategy. Well, I sure appreciate that. Remember, if you're gonna do this stuff and be a moving average trader, the number one thing you have to do is you have to get in on markets that are going to be directional. And the next thing you're going to have to do is dial in the periodicities of your moving averages. I would advise, if you're going to trade the U.S. session, something like crude oil, I would be looking at your, I would be looking at something like a 30-minute chart would be my basis. I think a person could use this on, say, a 4-hour gold chart and swing trade with it. I think you could do that. Even if you wanted to use the 5-8-13, you could put it on longer time frames and just see how it works out. It's just more aggressive strategy. If you want to be an investor, you would use the 5-100-200, and that's for long-term investiture, or the 50 and 100-200. And then after that, you'd have to dial this in. But this is a place to start. Now, a lot of work's going to go into building any type of strategy you guys want to employ and turn loose on the market. There's a lot of work involved. I could sit here and really tell you stories the rest of the day about some of the trials and things that we went through trying to build a finite strategy using a set of proprietary indicators. There are many pitfalls. Now, we did this back in the day, so you have much more advanced automation tools than we do or than we did. You have better data. We had a problem getting tick data that was accurate. And that was in 2010, 15 years ago almost. So you can do this stuff. Check out some of those AI tools they got out there. There's a couple of performance AI, I think was one of them. Check those out. Put a 5-8-13 in there. Run it on a bunch of different markets and a bunch of different time frames. See which times a day are most profitable. One thing I ask you, though, be conservative with your profit targets and your stop losses. Make sure that you're not backfitting the data. What that means is you're going to build a strategy on AI, and you're going to say, okay, this is going to make me $1 million according to what we've seen over the past 5 years. And just remember that when you do that, guaranteed you're going to get a tighter stop loss with huge profit targets, and you will have figured out how to trade the last 5 years perfectly. And guess what that means tomorrow? Zero. Absolutely nothing. All right, everybody. Can you make a video about Bollinger Bands? Yeah, I made one a couple years ago. It's out there. Go to Forex Signals TV on YouTube and type Bollinger Bands in there. You'll get it. Or you can come by and private message me in the trading room, the How to Trade trading room, and I'll be sure to get you. I'll send you the link to the video. All right, everybody, I'm going to go ahead and take off. A fascinating day. Remember, if you made a stack of money today, put half of it in your pocket. You want to be around for next Monday. I think it's going to be a great trading week, a little tamer than what we're seeing today. Right now, stocks are ticking higher. Crude oil's getting hit. But where did we go on the crude oil? 70.50. We went right up to 70.50. So the bet was on that 1 minute trade, were we gonna go down and take out 70 yet, or were we gonna bounce up to 70.50? Right now, the intraday shorts are getting eliminated, and that's what really bothers me about a lot of trading. The market moves, then it bounces. It stops everybody out that's short. It's not that you're wrong being short. It's not that our strategy was wrong. It's just the timing sucked. The trade location sucked. Good trade location's how you win. So right here, I would be sitting at 64s and feel pretty good about it. 64 sell. I'm looking to make maybe 5 to 8 ticks. We'll see how it goes, but I mean, that's a pretty good sell. And that's with the trend and with market structure. Bren, absolutely, Bren, my pleasure. All right, everybody, I'm going to go ahead and, I'm going to go ahead. Yeah, Manish, could you please suggest to me which risk versus reward follows for the strategy? You got to build that yourself. I just explained all the different ways that we could tailor risk versus reward, and that's why everybody in this space always says you have to have a huge risk reward. That's how they manage variance. That's how they manage volatility. They say, well, when I win, I really win. Well, when was the last time you won? 2018. It's the truth. That's why I use one-to-ones. I want a high winning percentage. I want to show up every day and grind out a profit. That's what I want. But so I would, to answer your question, on a 5-minute time frame, risk versus reward, I would go with a 1-to-1, maybe tighter, something like that. All right, everybody, I've droned on long enough today. You guys have a fantastic weekend, a great trading day. Big shout out to my University of Montana Grizzlies tomorrow night. They get number 4 UC Davis at home. Can't wait. I think it's going to be a fantastic game. This was an epic week, a historic week. It was a big deal. What happened this week was a big deal to the markets. We're going to be all over it. Need a little bit of time to think about the dollar. I'm not sure what's going to happen to the dollar. I have a pretty good idea what's going to happen to stocks and commodities, though. So we'll see exactly what happens next week. Thanks again for joining us. Check out our new YouTube video we just dropped a few hours ago. And until next time, trade the action well, and we'll talk soon. See ya.